America stands at a moment of sharp debate and rising uncertainty. Many people across the United States believe that the country is heading toward a major economic crisis. Yet a surprisingly large number of economists, investors, and analysts argue the opposite. They believe America is not on the edge of collapse. Instead, they see a complex, slow-moving, and highly adaptive economic system that continues to show resilience even in stressful conditions. Today, we explore why these experts think the United States is not immediately heading toward an economic disaster. And we look at the deeper structural forces that are shaping the future of the American economy in 2025 and beyond. Let us begin with the first major reason. The United States has one of the most flexible and innovation-driven economies in the world. Harvard research and multiple global studies highlight that the central strength of America lies not in stability, but in the ability to adapt. From artificial intelligence to clean energy to biotechnology, the United States still leads the world in high-impact innovation. This innovation is not limited to Silicon Valley. It spreads through healthcare, manufacturing, logistics, and financial technology. Economists argue that such deep innovation networks create natural shock absorbers within the system. Even when one sector slows, another industry accelerates, and the balance keeps the national economy alive and moving. The second reason is consumer demand. Despite inflation and high interest rates, consumer spending has not collapsed. United States consumers continue to spend at levels far above most advanced economies. This is important because almost 70% of the American GDP comes from consumer activity. As long as the average American continues to spend, work, and participate in the economy, the system has a built-in stabilizer. Large-scale collapse becomes difficult without a total drop in demand, and analysts say that drop is not visible right now. The third reason is corporate strength. The largest American companies are operating with strong balance sheets. Technology firms are sitting on record-high cash reserves. Energy and defense companies have strong global demand. Even though some industries like real estate and small retail are under pressure, the corporate giants that hold much of the economic weight are still investing and expanding. This is one of the biggest reasons why analysts do not expect an immediate economic meltdown. The fourth factor is productivity. In the last 2 years, many experts assumed that American productivity had peaked. But new data suggests something unusual. Productivity sharply increased in several sectors due to artificial intelligence, automation, and digital transformation. Companies have learned to produce more with fewer resources. Harvard economists call this silent transformation a hidden engine of the future economy. Higher productivity means higher earnings, lower costs, and stronger long-term growth potential. The fifth factor is the labor market. Although layoffs make headlines, the overall job market remains relatively stable. Job participation is consistent. Immigration policies have increased the availability of workers. Many industries like healthcare, construction, manufacturing, and energy still report labor shortages. A stable labor supply prevents rapid collapse and keeps wages and spending moving at sustainable levels. The sixth factor is the strength of the United States dollar. Even in global uncertainty, the American dollar remains the most trusted currency in the world. More than 60% of global trade is still conducted in dollars. This gives the United States a unique advantage. When other countries face instability, investors move their money into American assets. That inflow keeps U.S. markets and institutions steady, even during internal stress. But it is also important to understand what this does not mean. The United States is not free from problems. Inflation remains a major concern. Housing affordability is one of the worst in decades. National debt is rising at an unsustainable pace. And geopolitical tensions create additional pressure on energy supply chains and trade routes. So why do experts still believe America is not heading toward a sudden collapse? The answer lies in one idea. The American economic system is built to bend, but not break. Unlike many countries, the U.S. economy can slow down, even pause, but it rarely collapses completely. The government has powerful monetary tools. Businesses have deep capital reserves. Consumers have strong credit access. And the global system continues to depend heavily on American trade, defense, energy, and currency. So what is the truth? Is America safe from crisis? Or is the country living on borrowed time? The honest answer, supported by academic and financial research, is this. America is not heading into a sudden dramatic collapse. But the United States is entering a decade of structural challenges and slow adaptive change. The crisis is not expected to be a crash. It is expected to be a long, difficult adjustment. Here's what people need to understand. The future of the American economy will depend on how fast the country adapts to new technology, how it manages its national debt, how it handles immigration labor and education, and how it responds to global competition, especially from Asia. In simple terms, America is not falling off a cliff, but it is climbing a steep mountain. Stability will depend on disciplined innovation and smart decision-making. So the next time someone asks, is the United States heading toward an economic crisis? The most accurate answer is this: America is not collapsing, America is transforming. And how the nation handles this transformation will decide the future of the global economy. Thank you for listening. Stay curious, stay informed, and take care.